afternoon, Anton.
Good afternoon, Matt. How's it going?
I'm great. How are you? Of
Good, great. Thanks
let's
a lot
let
for having me.
of course, let's jump right in. So, my name's Matthew Dorr. I'm an investor at General Atlantic, which is a large global growth equity fund, and I help lead our investments in the digital assets ecosystem. And I'm a proud board member at Talos, where we had led the company's Series B financing. So, very excited to be having a conversation here with a good friend, Anton Katz. Anton, rather than me introducing you, perhaps you could just share a bit on Talos and the company's role within institutional trading.
Awesome. Thank you very, very much. So first of all, big thanks to the SCB10X team for having us and organizing this event. I think it's my third or fourth time recording and doing this event. So really excited to be here. Thank you so much, and thanks you for all your support. And Matt, and obviously thank you and thank the GA team for being, a strong supporter of Talos and a huge, huge help over the past couple of years. So thank you very much. My name is Anton. I'm the co-founder and CEO of Talos. We started Talos about 7.5 years ago with Ethan Feldman, who is my co-founder and CTO. By background, I'm an engineer. I've been a developer my entire life, with a slight focus on cryptography in college. Prior to Talos, I was at one of the largest quant asset managers in the world, leading the trading technology division there. Prior to that, I was the director of software for Broadway Technology, which became one of the largest providers, if not the largest provider of trading technology to the sell side sector. So, I spent my entire career, and that's true for quite a lot of people here at Talos, building large scale systems for institutions, allowing them to connect to the market, to trade, to exercise investment ideas. Today at Talos, when we started Talos, our focus was exactly that. We were, the target 7.5 years ago was to build something that allows institutions to interact with crypto. So we said crypto is likely going to become an asset class. That was kind of like our bet. And we said if that's true, then institutions will need the kind of infrastructure that we built for every other asset class before. So that's like where we started Talos. Over the years, Talos has evolved into a much, much broader ecosystem. So today, Talos is an infrastructure provider for some of the largest institutions in the world. So we are globally active across buy side and sell side. And we provide those institutions with access to digital assets. So still the vast majority of the focus for us has been in the previous years crypto, although right now it's kind of like developing into digital assets because of what's happening with tokenization. But in short, what we provide is a one-stop shop. An institution can come to Talos and connect to their custodians, no matter how they are. They can trade across 100 and something liquidity providers that we connect to between exchanges, OTC desks, decentralized exchanges. They are able to do things like algorithmic trading, RFQ. We have a real-time risk platform, portfolio management platform. We have a settlement system. We have a reporting infrastructure. We have a white label product that is used today by some of the largest brokers in the world, and we have enormous reach there as well globally. So we really are, today the infrastructure provider for the vast majority of the larger institutions, both in, coming from traditional assets and also crypto natives, allowing them to either provide their customers with the ability to trade crypto, and now growingly, increasingly digital assets, or the buy side community looking to trade on their own, these kind of assets. That's what we do.
Makes sense. And Anton, you've got a very unique and relevant background, having spent a lot of time in the traditional capital markets infrastructure world. And one of the themes that I know you're focused on and the whole industry is focused on is the idea that tokenization is appearing in many more asset classes beyond just traditional crypto assets. I'm curious your take on the problems that institutions are actually trying to solve with tokenization and how that moves the industry forward relative to what the existing capital markets infrastructure looks like today.
Yeah, it's an interesting question because that's That's the question that a lot of large institutions are asking themselves as well. And look, tokenization, we've been talking about tokenization for quite a few years. I think that now we're starting to see, it's actually starting to happen. We're starting to see institutions coming in, participating in the tokenization efforts, and more than anything, before I dive into, how it can change the market structure and why it's important, the key thing to understand here is that if you hear the word tokenization only from technology providers and platforms, including us, right? Like we've been forever saying all assets will be digital assets, but ultimately, it's we are there to provide services, and that's true for quite a lot of our peers as well. The minute you start seeing tokenization from traditional institutions, from some of the clients, people that are trading these assets, people that are actually generating demand, saying we would rather interact with this ecosystem and we would want to interact with this ecosystem, that moves the needle. And that's actually what's happening right now. This is the difference between now and in the previous years. In terms of the capital market, in some cases, you can do what you do today, what you can do today in tokens, you can do in capital markets. It is highly inefficient. It is very hard to do. And in some cases, there are some things you just cannot do. So here's some of the examples, right? Collateral movement and collateral management, like we do this in capital markets day in, day out. But the market is relatively slow in terms of its mobility. And as a result, it causes delays, it causes systemic risk, it causes quite a lot of things. Part of the reason why, you can't move these assets 24/7 in real time is because there are multiple institutions not interacting on the same medium. There's no blockchain or kind of like a common database or any kind of common infrastructure. It is really one institution talking to another. And in many cases, it is multiple institutions on this linear track. They're interacting with each other to facilitate something like a movement of collateral, a settlement of a trade, and that introduces quite a lot of complexity and time into the system, right? So now, if I wanted to do something like, hey, Matt, I want to lend you something for a trade that you are about to do right now, and it's only relevant to you right now, for you to be able to get access to that kind of liquidity is going to be tough, especially if we don't have any kind of established relationship between us, if we don't have a track record, if we don't have established lines. Digital assets does remove quite a lot of that, right? Digital assets are working on a common medium. We have a blockchain. The collateral movement happens on that level. We can independently verify that the movement is actually happening. On the Talos platform, our clients can settle the trade from anywhere in the world to anywhere in the world, generally within 10 minutes. That's not something we can do ever in capital markets, And so that starts to breed all kinds of interesting use cases that are built on top of some of these primitives of 24/7, of being able to access it from all over the world, of the real time. It's just like if you think about, again, like I'm an engineer, so I think about it in engineering terms. A lot of it is for me, what are the abstractions? What are the kind of like the primitives that come with the system, right? In capital markets, we have a traditional system that's been built over many, many years, but the primitives are kind of like built on top. Like there's not a lot of these things that can truly help us move assets as we want to and establish a more coherent ecosystem, right? So it's been a lot of hard work to put this kind of infrastructure in place. Now we're moving to a technology that the primitives allow us to just build faster, better, more interconnected, more transparent ecosystem. So that's that's kind of like where we're headed to. It's I would say one more thing. This is part of the reason why in capital markets, when you provide services like the services that we provide, you provide generally vertical services. You're saying, I will have a vendor for trading, and there are vendors for trading. You will have a vendor for custody of these assets, maybe somebody on the reporting side. They interact with each other through APIs, just like banks interact with each other on the trading side, right? It's always like one entity to another entity to another entity. Once you have a common medium, you can build the kind of system that we built at Talos, which is really this notion of connecting the entire investment lifecycle, all the way from, hey, what is my risk? What are my positions? What are my balances into the trading and directly into the settlement, compressing that into a single value chain. That's a huge deal. That brings a lot of efficiency, that reduces risk substantially. So that's what we're seeing. And our bet is that the entire ecosystem is going to be moving towards that.
It makes total sense. Something that you touched on was the idea of instantaneous settlement, 24/7 accessibility for trading. How do you think about whether tokenization is just a wrapper around the existing capital markets infrastructure that exists today, or how it will fit alongside the existing systems?
Yeah, I mean, look, this is it's again, it's a question that everybody should be asking themselves because in a complex system that is working today, which is capital markets, you can't just flip a switch. You can't just come in and say, "Hey, I have this better system. Come and use this better system," and everybody's going to say like, "Ah, all I have to do is flip a switch, and now we're on it." It's more like it's like the overused analogy of changing the wheels on a bus that is in motion and has like a bunch of people on it, right? Like that's actually the reality. The reality here is that you have a system that cannot stop. You have tons of institutions, to your point, that have their own system, their own systems that are working on like in the legacy capital markets environments. Potentially, some of these systems are daily systems. They only come in at the end of the day and they calculate some things. Majority of the systems go to sleep during the weekend through upgrades, through like literally just like being turned off and being in recalculating state in the like on open of the week, and so not compatible of 24/7. It's much easier to say right now, like, yeah, we'll just move capital markets to 24/7. If you actually ever built systems in capital markets, you should know that that's not an easy thing to say. And on one example I'll give you, like, remember how long it took just on the settlement side to go from T plus 3 to T plus 1. Many, many years. And we're not talking about like a crazy, crazy change, right? So a lot of these systems, the legacy systems, really are there not able to just like instantaneously go towards this like real-time 24/7 calculation system. That's not going to be the case, right? So what we're likely going to see is we're going to see this almost like a hybrid market. And that hybrid market is going to be that likely some of the liquidity, and that's what we're starting to see this year. Some of the liquidity is going to migrate to digital assets rails. Some of the liquidity is going to remain in traditional markets. The problem is that the traditional institutions are going to be kind of like caught in between. Like think about yourself as a large service provider, a large bank, that today you have access to 100% of the liquidity you can trade. Tomorrow, if that liquidity is split, you don't have right now the tools or the infrastructure to be able to connect to this other portion of liquidity. What if that split is 60/40? That means that some of these institutions will lose 40% all they have access to today. That's not a situation that is sustainable, and that's not a situation that a service provider can handle, right? And so our job is to come in and basically say, like, look, the world is likely going to be the world of yesterday. Then there's going to be hybrid. Over time, it's going to migrate on chain. We understand that there's delay between the hybrid world and the on-chain world. Our job is to facilitate all this transition. So today we're working with a lot of traditional institutions, basically coming in and saying, look, we are going to be your translation layer of your existing use cases that we understand really well because we come from the same industry. We've built those systems before, and we're going to be translating those use cases to on-chain use cases, connecting you to this. And it's not connecting to a single chain. It's really allowing them to connect to the entire ecosystem and to use us as an abstraction layer, an integration layer into their existing systems. As things progress, the hope is that we're going to see more and more activity on digital assets, and then so you mentioned 24/7. Again, not an easy thing to migrate to, but we have traditional clients today using the Talos system, and they are effectively working in a split mode where our systems are connected to the 24/7 digital asset systems. They are feeding their existing bank systems or their existing asset management system either at the end of the weekend in case that they are active during the weekend, or like rehydrating those systems kind of like as you go. So this is not something that's theoretical. This is something we do today. I think we're just going to do more and more and more of it, providing this kind of like level of compatibility to existing traditional institutions. Does that make sense?
It does. Are you starting to see your clients and the large financial institutions and banks converge their workflows across both traditional finance and crypto? I think a lot of times banks will have separate digital asset teams that are focused on these problems, but as it is starting to migrate into a lot of the traditional assets, I imagine that might collapse over time. How have you seen that manifest in your clients and what they want from Talos?
Yeah, so I would say that there's a couple of things to mention there. It's kind of interesting. One is that we cover quite a lot of clients, and so we have the retail brokerage clients. A lot of those clients are moving, like some of them are more traditional retail brokers, some of them are crypto native retail brokers. Those are definitely emerging. Like all of them are like looking to provide all capabilities to their customers and really open up the door to trading a lot of different assets. So that client segment is 100% moving and combining a lot of these things, especially as they believe, I mean, they see the writing on the wall. They see that, more traditional assets are going to be working on digital assets rail. So even if it was a little bit separate initially in the firm, strategically, they're looking to integrate that. In banks, it's slower. We definitely have like it's kind of like divided into two sections. Some create completely parallel infrastructure between digital assets and capital markets, which allows them to run a lot faster, by the way, because like it's a you're not effectively bogging down your existing systems with this brand new infrastructure. You are literally feeding. So we have a couple of clients that have done that very, very successfully. And then there's some that are putting it under a mandate of an FX desk. A lot of it is under FX, sometimes under like commodities. And so that works as well. It takes a little bit longer from a time to market perspective because you do need to retrofit some of your existing systems. We do a bunch of that with our customers. That's a slower exercise. It's all of it is happening right now. Pretty much everybody understands that like crypto used to be this completely isolated, honestly very sexy and attractive asset class, and it's getting institutionalized. It's getting, to be yet another asset class alongside more traditional asset classes. And especially as those migrate on chain, those asset classes will look very, very similar.
You touched on FX and commodities, which makes me think about the different underlying asset classes that could be tokenized and are starting to be tokenized. At least from our seat, we've seen tokenized treasuries scale quite quickly. I think commodities like gold are also starting to be tokenized, equities perhaps a little bit earlier. I'm curious your view on the need for tokenization across different asset types and which ones are well suited for tokenization now or in the future.
Yeah, look, I mean, I think there used to be a prevailing thought that the more complex things, like fixed income asset classes that have um, when you're managing the entire life cycle of an instrument, that is going to get tokenized first because of the programmability that's embedded in the asset class that you kind of need. So imagine that you had like this very you know this very specialized fixed income instrument that you need to manage, and there's like a bunch of stuff. There's like fixed income coming out of it. There's some variable rates. There's all the stuff that you need to manage. If you connect smart contracts to it and you kind of like manage it in one go between the multiple institutions, very attractive. Reality, however, has been very different. What we're seeing right now is that it's not that the assets are ready or not ready to be tokenized. It's where the clients take you. And part of the reason why we're seeing, treasuries being tokenized aggressively, and now the conversation is happening a lot around equities. Treasuries are like they're very, very important to the institutional workflow. It's collateral management, it's yield, it's tons of reasons why institutions would want to interact with treasuries, trade treasuries, buy treasuries, have treasury derivative instruments. And so those are getting tokenized just because people want to interact in a better capacity with them, in a faster environment, potentially over the weekend, potentially for an hour, which is like not available right now in Canada. So this kind of optimization of the marketplace is happening on the treasury side. Equities is just about access. Today, accessing, like US equities, you and I are both based in New York, fairly easy for us. Like we go to our favorite broker, usually one of our clients, we buy the things that we want and we're done. But actually, there's quite a lot of demand for US equities outside of the United States, and the path is a lot harder. And so if you imagine a world where equities, United States equities are coming on chain, that opens up the door to a lot more investors globally. And I can tell you that our customers globally are the ones that are asking for that kind of access for their clients. They're not asking because they think it's a good idea. They're asking because they have demand. And so that's another reason why an asset class is getting tokenized again, like just because there's demand, not because it's a good idea, because there's demand. And honestly, like, look, equities is a great example. Like we always said, equities is going to be the last to tokenize, and that's like a huge mistake. And the reason why we used to say that is because like, well, I mean, equities are traded like really, really well. It's like on the front office, it's like such a, like it's the most advanced from electronic trading capacity instrument, right? It's going to follow the market. It's going to follow the customers. Just like always, the customers always right. They're going to dictate what's actually getting on chain. The demand is going to dictate that, just like the demand right now is dictating the tokenization will happen.
I fully agree with your point around broader retail access globally to the US capital markets and stocks. Do you think that US equities in tokenized form will become increasingly popular in the US, or does the existing system function well enough that it's actually more of a global retail distribution question?
Yeah. Yeah, it's a cool exercise to think through. So generally speaking, you can say, let's just talk about like, so the wider world we covered, but let's say United States and US equities inside the United States, like why would they be tokenized? Well, on one hand, you can say, I can access those through any brokerage. And generally, like a lot of people that tend to trade US equities have at least one brokerage account. So the access is kind of solved. Now, there are some aspects of like, if I don't have a brokerage account and I want to access it even in a permissionless way, tokenize is the only way to do this, right? So even from that access perspective, where you very basically don't want to go through an institution, you can say, but you kind of squinted it and you basically say like it's not necessarily like a strong use case. What is stronger use case though is that you can take those tokenized equities and as an individual you can put them in workflows that don't exist in capital markets today. And what is the specific that like what do I mean, right? If you look at what's happening with DeFi today, right? I can take a token and I can borrow against that token very, very easily. I can literally borrow dollars against like Ethereum, in some cases Bitcoin, more and more RWAs. That's something that's actually not that easy to accomplish right now through a brokerage solution. And so thinking about something, putting up a collateral, putting up your US equities that you hold as a collateral against something, as a part of the larger trade that you're doing, it opens up the door to quite a lot more use cases. So even domestically, even in the United States, I would argue that there's a good use cases for tokenized equities, which people kind of think about access, they think about 24/7. Yes, that's part of it, but there's a lot more. And I think the DeFi is just a phenomenal experimentation land where you can see a lot of the stuff in crypto being built out, and you can totally see how that can extrapolate into traditional asset classes.
You characterize DeFi as experimentation land, and sometimes it can feel that way, especially as you see headlines of assorted, hacks or things that have broken in DeFi at various times. How do you think about where institutions are in their adoption of and their level of comfort with the technology broadly?
Yeah. So first of all, let me correct myself. When I do think that DeFi is experimentation, but it's not experimentation just for the sake of experiment. I think that DeFi is just the first to do quite a lot of things. I think that crypto in general, there's just a lot of experiments that do happen in crypto and in DeFi. It doesn't mean that they're just experiments for the sake of experiments. Those are real use cases that are happening there today, And so my strong belief is that DeFi is going to play a major role in terms of how capital markets evolves. And as an engineer, I find that like fascinating. I'm looking at things like, if people haven't looked at it yet, you should be looking at things like vaults. And what vaults look like, because vaults is an asset management or a wealth management infrastructure that is in DeFi, but the barriers of entry are basically zero. Imagine like the most coveted portfolios that you could never allocate capital to because they're coming in and they're saying like, buddy, you have to put in $50 million. That doesn't exist in DeFi. In DeFi, you can start investing from your first dollar. That's a huge deal. So this kind of optimization is happening in DeFi, and I do think that DeFi is going to play a meaningful role. Where it is today, it's early. I think that we support we connect the institutions to DeFi trading. Definitely, DeFi trading right now is a minority in terms of all the trading activity that goes through Talos. It's constantly on the rise because there's good liquidity there. There's also access to instruments that sometimes are not available on centralized exchanges, although those kind of gaps are now decreasing. But then the bigger deals, the yield aspect of it, the lending, borrowing, the vaults, there we have quite a lot of demand from institutions, both on the buy side and on the sell side. So to be clear, buy side, to be able, for a hedge fund or for a proprietary trading desk or an asset manager to come in and interact with it on their own, and also from a service provider ecosystem, which is like half our clients, is to offer these kind of capabilities, those yield capabilities and others, DeFi capabilities to their customers in turn. So definitely a lot of interest. And I think within, we're investing a lot in that ecosystem today. I think that we're going to see a lot more traction within the next 12 to 18 months.
Makes sense. I know one area that Talos is investing in heavily is data, and the company acquired CoinMetrics relatively recently. We talked a lot about the benefits of tokenization, but there's oftentimes also trade-offs and adapting to the new world in terms of risk management, reporting, valuation, all the back and middle office work that does need to get done and done right. How do you think about how tokenization of these assets impacts that world and how Talos might have a role in the data
Yeah,
side?
of course. Look, I mean, so we're super excited. CoinMetrics was our fourth acquisition to date. CoinMetrics is the largest provider of data in digital assets, and so we see data. I mean, I hope that alone already solidifies the fact that we see data as something super important to the ecosystem. We wouldn't be doing this otherwise, and it's been a great acquisition for us so far. But you're exactly right. It's if you come from capital markets, data, you know how important data is. And data relies on public sources, it relies on private sources, it relies on trading data. Like all the stuff that we do is either backed by data or we generate data that is going to be useful for our customers. But here's one example of things that are happening today. Take a look at what's going on in Hyperliquid. Right, Hyperliquid is a decentralized, mostly decentralized exchange that is providing access to their clients to instruments like CFDs of Nvidia or CFDs of oil, right? So derivative contract of oil, perps or CFDs. We now have traditional traders that are looking at that data, and especially overnight and weekend activity, to understand how their specific markets are trading, right? So you're starting to see data coming from the crypto, from the digital assets ecosystem, feeding the traditional assets world. And of course, for us, that's part of the strategy. So we think that data, especially as we're starting to see those assets become 24/7, as we see liquidity getting latest guidance from is coming out, we are likely going to see a world where tokenization is going to become a lot easier and a lot more accessible. That might breed very distinct pools of liquidity. If that happens, getting the right data, understanding the entire world, understanding how price discovery works, where the price is today, is going to be more important than ever for institutions. I think the data is going to play a very meaningful role in this entire tokenization ecosystem.
Great. We're coming up on time, so last overall question for you is: there's clearly a lot of building in and around tokenization going on at the moment. If you think about the hype cycle of technology and where you're at, whether it's the peak of inflated expectations or the slope of enlightenment, where do you think we are today? And in 3 years, will we look back and have made less progress than we hoped? Do you think we'll be a lot further than people even expect? What's your gut take on where we are in 3+ years?
So I think tokenization used to be in the hype side, 2, 3 years ago. 3 years ago, it was constantly, that was all the talk, and tokenization. And it was all on the infrastructure side. And it was just there was not enough of institutional support. There was not enough of client support. It feels to me like this one is very real. And I'll defer to Larry Fink, who's the CEO of BlackRock, says exactly the same things. He just like us. I mean, obviously not because of us, but he's saying all assets will be digital assets. 100% agree. We always say that, we always believe it. But you should listen to the second thing that he says. He says it's going to happen a lot faster than you think. And I truly believe that. I truly, truly believe that. I think that in 3 years, we're going to make more progress than a lot of people think, because people think it's going to be a slow burn in that direction. I think if it was just switching to a different infrastructure for the sake of switching, it would be a slow burn. But I think here, I think this year is going to be very pivotal. We're going to see the first real tokenization use cases, the first trading activity. My hope is that it's going to cement in people's head the huge benefits that you get from this ecosystem. And at that point, you're going to be either compete or die. And so I think that there's going to be quite a lot of institutions. And already today, I mean, we're speaking to our clients, a lot of resources are invested into understanding, plan, and starting to execute on the strategy around tokenization, real world assets, more digital assets. And so I think it's going to come up on us a lot faster than many people think.
That's great. Well, as a proud investor in Talos, we are excited for it to continue and to see your role in it all. And with that, thank you very much, Anton, for taking the time to chat, and thanks to the audience around the world for tuning in.
Thank you very much. Thanks a lot for the questions. Thanks a lot for your continuous support. I will see you in the next board meeting, and thank you very much to SCB 10X for hosting us.
It's great. See you soon. Thanks all.